Hello and welcome to this edition of Closing Trades. And in case you were just thinking that any long weekend, heavy duty earnings or anything is going to stall India markets, clearly not. It's been a one-way move up. What looked like it's going to be one of those very tempered days, given that next week is a lot of earnings. You still don't know what's going to come out of China or US's negotiations after China's official commentary stating that they're willing to at least talk to US and negotiate on the tariffs. It's pretty much been a one-way move up for our markets. 23,345, 845, I beg your pardon, and still going strong. 400 points up in the green, and the strength that you're seeing in some of the leadership names like banks, and I think the signs were pretty clear yesterday when you had some of the underperformers from within banks actually play catch up. That an all-time high is just a short distance away, if I can call it that. But look at the way the Nifty Bank has moved, 54,332. You've got an HDFC Bank, which has already hit an all-time high. Let's bring up that intraday graph for you. 1,800 plus levels on HDFC Bank. 1,900, I stand corrected at that. A solid 2% of a move coming in for that stock. ICICI Bank has been going very strong into its earnings on Saturday, which, by the way, is when HDFC Bank also delivers its numbers. And then the kind of catch-up that you've seen from an IndusInd Bank, from what you've seen in an Axis Bank, the rally in the banks is only broadening. An Indian Bank, IDFC, all of these stocks have been participating in the banking rally that's taking place. So clearly, with banks at the helm, IT at the bottom, given how Wipro is consistently been lower after its numbers and them revising the guidance lower for FY26, 4.25% of a downtake. LTIM is also languishing. Similar is the case for the HCL Technologies, a TechM. Infosys, even though it's covered a lot of lost ground from where it started off in trade, but it's still languishing pretty much in trade. It's got that negative bias. But other than that, look at a Reliance, look at a Bharti, look at SBI, Shriram Finance, Trent. It's a solid day today. Kunal, what do you think?
So I think we've factored in for what is likely to happen tomorrow on a week, on a holiday, on a weekday. So I think we were discussing this point that maybe the markets would probably go in with a tempered expectation, but the major reaction could actually happen on the GIFT Nifty side on Friday. But I think this is a fantastic reaction from the markets, and this tells you that the strength is with sectors and stocks which have been performing very well. The banking stocks looking exceptionally strong. And the large cap names leading the chart from the front. Earlier you had names like Kotak Bank, which was one of the top performers. Then you had ICICI Bank and HDFC Bank, which managed to come back and make new highs for themselves. And that too in a point where just over the last 2 months we've seen a dramatic change of sentiment. Just 2 months back, many of these stocks were trading sub their long-term averages or underperforming zones. So for that sea change to happen in the last 2 months, I think is an exceptional change of trend as well as sentiment for the markets, as well as for the banking index. My expectation now is that the earlier 23,800 mark, which we were picking as a target, I think since those levels have been breached for the index, we could now be looking at 24,200 as the next set of a target for the index.
Right, so that's the talk about the markets, where we are headed from here on, given the fact that, yes, we have actually surpassed the expectations, at least in today's trading session. When you talk about the Asian peers as well, you had the US markets that ended in the negative territory. You had the European futures indicate a negative start, but here you have the Indian markets bucking overall market trend. 23,000, I beg your pardon, 23,800 is what we've surpassed in today's trading session. We also have Sandeep Sabharwal joining us on the show. Very good afternoon to you, Sandeep. And how should one read into this? Because we have a truncated week back here. When we come on Monday, we have no idea what sort of news flow we will be actually dealing with. For now, do you think we should take one day at a time?
So truncated weeks are suiting us these days, because the day when the market actually crashed, we were shut in many of the world markets. So I think the truncated weeks are not bad. But I think nevertheless, I think it was very clear that there was excessive bearishness and markets will rally. When markets start rallying, sometimes the pace of the rally is very tough to predict. So, like in a bearish phase, sometimes how much the market falls, it's very tough to predict that. You think it could fall till this time, this much, but it falls much more. Similarly, on the bullish side, the same thing happens. I think several macro indicators are quite positive for India, like the inflation coming down, the monetary policy, the sharp pickup in government expenditure, and the expected pickup in private consumption as the tax breaks which were given in the current budget begin from this month and people have more disposable income. So I think things are fine for India. I don't macro wise. I've been saying this for some time that there's excessive bearishness and market should do well.
Well, 1900 now in HDFC Bank. Who would have thought 3 years back, pretty much same time around when the merger got announced and the way the stock tanked after that, it tested many a patience, for a better part. And I think the move in HDFC Bank, Kunal, has begun really 6 months to 1 year back?
Yeah, almost 1.5 odd year. To be precise, I think Jan 2024 is where the stock bottomed out. That was at 1350, 1400 for HDFC Bank, and that was the point where the stock, ended that 2 years or 3 years of a sideways or a very tight kind of a range for itself. And from that low, the stock has not, breached that low ever since, Jan 2024. And from there, we're now almost at 1900 plus mark.
Oh, yeah, absolutely. Look at the 6 month graph. I think that's going to give you a better picture. I mean, not to say that HDFC Bank has not fallen when the market fell. You can see those jagged edges, but yeah, elongated over a period of 3 years. It's risen pretty much one way up from those 1300 levels all the way to 1900, and who knows, maybe even 2000 on HDFC Bank. Look at the strength in names like Bharti. It's already at 1880. I mean, it's pretty much one of those leadership names, hasn't fallen at all in the market fall since October of last year. And it's still going strong there, another 3.5% of a move up. And then, of course, there are those creme names like ICICI Bank still going strong. A good 3.5% move up is what you're seeing on ICICI Bank as well. Sandeep, I don't think one ever doubted that ICICI Bank and HDFC Bank, or even Kotak for that matter, and I recall that you were pretty correct in actually calling a bottom on Kotak when you said that you are going to be beginning to buy into the stock, and then you of course over time added positions there. But how do you broaden now your presence within banks? Do you stay put with these names? Do you add on to these, or do you actually look for bottom up stories within banks?
Banks is one segment, Aisha, where I always say that stick to the leaders if you are going into banks. So I think the larger banks itself, like you said, ICICI, Axis, HDFC, Kotak, SBI. So I think these are enough banks. Why do you want to go down further into smaller and smaller banks? If you want to take some risk in NBFCs, go to higher quality. In financial, go to higher quality NBFCs which have relatively lower risk profile. And because of the fact that in a declining interest rate scenario, typically NBFCs tend to also outperform banks. So I think right now it's a large cap move. So I think as the large caps move up, stabilize, we might see some NBFCs on the mid cap side also participate.
Let's see the leadership within NBFCs then, and let's bring up the charts for Chola, for Shriram Finance, for Bajaj Finance. But Kunal, to be fair, and I'm just picking up the top rung from within NBFCs, they too have moved up, right?
Yeah, they too have moved up, but in that order, I think Bajaj Finance is the only one which has actually made a new high or crossed the previous 2023-24 highs. Chola Finance as well as Shriram Finance, these stocks have yet to make a comeback or at least break past about their previous highs. And that's where I believe that the markets are, because we were initially at a point where the choice between the sectors was very limited towards few stocks which were doing pretty well. Now that the markets out, the risk on appetite has come back again, the markets would start to open up. There would be a lot more underperforming names or the tier 2 performing stocks which could make a comeback for themselves. I think in that aspect, there could be a very strong trade, which could happen into the second rung names. And I think in that sense, Shriram Finance, Chola Finance, L&T Finance, many of these stocks, I think they can make a very strong comeback.
Sandeep, would you want to name some of the NBFCs where you still think there's value on the table?
I think L&T Finance is something which we hold. It didn't fall in the entire crash, and I think it's pretty well placed. It's not very expensive. M&M Finance, the reported numbers on a quarterly basis in terms of growth were not great, so the stock corrected. But I think given the agri outlook and the rural outlook, which was also reasonably placed. You also talked about some other NBFCs like Chola, etc. They should also do well. And uh, Manappuram is again where the private equity players have come in. The stock's pretty cheap in terms of price to book or the dividend yield. So my guess is as the new management gets in and uh, the new structure takes place, it sets it on a good long-term platform.
Just request you to get your AirPods on while I'm just going to chat with Kunal on that. Kunal, well, Sandeep believes that you got to stick with the large cap quality names within banks. But as a trading move, can you buy some of those bottom up stories within banks?
Yeah, I think there's a strong case that now so what happens in every kind of a sector move. Initially, you have large cap names, the performing stocks which lead the charts. They move up higher. They move with a buffer of say 10-15% higher than the other underperforming names. But then comes a point when the risk on appetite comes back. That's where the underperforming stocks, they usually make a very strong comeback, and these underperforming stocks usually come out from the mid cap or the tier 2 category on the large cap names. So I believe in that sense there could be a very strong case which could now be built into many of the underperforming names. For example, you have Axis Bank, a stock which has been underperformer from the private sector banking name. That stock, I believe, even further can make a strong comeback. IndusInd Bank has already done pretty well over the last 1 month or so, 2-3 weeks, where it's recovered from 600, 620 levels to now almost on the verge of breaking that 800 mark. Then there are the other underperforming stocks on the PSU banking name. I think SBI is still yet to break past about the 200-day moving average, and that too at a point where HDFC Bank and other names are almost 10-15% higher than the long-term moving averages. So eventually that catch-up will happen in these underperforming stocks. So I think that's a space where traders could look at momentum as well as alpha generation.
Right, so that's the take coming in on the financial space, the entire BFSI space, and how that sort of space is looking like at this point in time. But Kunal, if you look at the charts today, you've seen a stellar recovery coming in from the IT sector. And also, let's not forget that also I think IT sector is also feeling FOMO given the fact that the rest of the market is moving up. But there's a lot of play for the IT sector. Today you have Infosys number, you had Wipro that actually weighed heavy, and because of Wipro you had the mid-tier companies also actually decline. What's your take now on the IT space? How should you see it on the charts? How is it looking? Do you see that sort of a resistance coming in?
So, it's completely contra to what it was for banking stocks. Last 2-3 months back, there was positive news for banking stocks and you saw the prices moving up higher. The news flow is very negative for the IT stocks and the prices are at a very attractive levels. Now, there would be a point where, say, over the next 2-3 weeks, there would be an increased amount of volatility into these stock prices, where the news flow may continue to be, say, negative or a bit more volatile or uncertain, and the prices would try to fluctuate. But these are opportunities for long-term investors to try and look at these price points or these oversold nature of indicators. Because when the market gets into a skewed kind of an uptrend, there hardly is a point where an underperforming sector, large cap sector, in the sense like IT, metals, etc., they would remain underperformers for a prolonged period of time. So I think it's a matter of time that these stocks could make a strong comeback. I believe that volatility or dips into these stocks, even from current levels, should be taken as a good opportunity for long term.
I don't know if we can bring up the Nifty contributors list or not. Do we have that provision? Because today, of course, ICICI Bank, HDFC Bank are big contributors to today's move. But look at a Reliance as well. While it's still languishing at that 1270 odd level, and it's been a tough resistance for that particular stock at this level, but 3% higher, so it's a very solid move. And I'm sure that today's FII buy figure is going to be a significant one, because the kind of movers that you have today, it's clearly smacking off FII buying. If you were to pick up the trend for the last couple of trading sessions as well, wherein DIIs have been seller, it's been the FII buying, wherein the quantum has been much higher, and you can tell with the names that are actually moving up in the market. But look at a Zomato, or shall I say Eternal, that stock also higher by 233 is where that stock is. It's a solid 5.25% move that you're currently seeing on that stock. Sandeep is back with us. Sandeep, we were just discussing IT, whether now you think the bad news is in the price, the stocks have fallen a good 30 to 35 odd percent, or does it even make sense? There are many opportunities in the markets have corrected a fair lot, so why look at IT? What camp are you in?
So I think today, if you're looking for a contrarian bet, I think it's better to maybe go into some consumer names or some beaten down infrastructure, construction kind of companies, which will benefit from the monetary policy becoming more supportive and government expenditure actually taking off. So IT will bottom out sometime over the next couple of months, I think, because many of the large IT companies are still strong cash generators with zero debt. So at some stage they'll bottom, but I think there's still a lot of uncertainty. There are still talks of a lot of project cancellations, deferrals, etc. So which might not go out so fast. So my guess is that maybe around the next quarterly results, if uh, the stocks, if the markets, let's say, do well, these stocks don't participate or fall a bit further, that's the time we could look at them as a contrarian bet.
Right. Let's take a look at exactly what the real estate pack is doing at this point in time, given the fact that the real estate space has been on a tear of late, and given the fact that you have a lot of market participants talking about domestic oriented counters or sectors that one needs to watch out for, given the fact that what is happening globally and the global turmoil. I want to get your view, Sandeep. Are you also of that camp that it makes sense to actually look at the real estate space right now?
The real estate companies are not cheap. So if you remember last year, real estate stocks continued to do very well, even when the overall market did not do as well. So I think a lot of the positives are already built into the prices. Although easing monetary policy tends to be beneficial for the real estate sector, but then we know that the sales velocity has slowed down on the residential side. On the commercial side, still activity is okay. So I think that these companies need to go through a phase of consolidation before we can look at them. Longer term, demand trend should still be fine. But I think in the near term, a lot of the positives are in the price.
So, Sandeep, where else have you been adding positions or shopping afresh, if at all, in the market?
So I think among the large caps, the stocks which are still underappreciated, I would say could be something like L&T or SBI, I think, which are not done as well in the up move. Because L&T fell because oil prices came off, so people thought their projects could get impacted. Plus, the IT subsidiaries might not do as well. SBI has, in general, underperformed the rest of the banking space. So I think in the large cap space, potentially I could think of these two which could catch up.
L&T as well as SBI. And Kunal, we've been chatting about that also, right? That L&T has really languished. And are you seeing signs of a recovery and a one-way move up with the rest of the market?
So it should happen. I think with time it should happen because in none of the bull market trends, for the indices, L&T has been left behind. Maybe the start could have been a bit more late for the stock. With a, it enjoys a correlation of more than 75%, 77%, and in healthy market trends, the correlations have been as much as 85-90% for L&T with respect to the benchmark index, that's Nifty. So I think it's just a matter of time that the stock could make a comeback for itself. On the short-term charts, we're seeing ample support at 3,000, 3,200 mark for L&T. That's where the stock had tested multiple times in the last 1 to 2 months of this market correction. But then on the upside, I believe that even if the stock starts a minor rally, we could be looking at 3,500 to 3,600 as a potential target over the very near term for L&T.
We've got Akshay Bhagwat as well joining another show. But before that, let me get Sandeep's view on pharma. Sandeep, a lot of back and forth on whether there are going to be tariffs slapped on Indian pharma or not. But what is your own sense on how pharma should be looked at, whether there are any positions that can be taken now?
I think the entire process of tariff imposition, how much tariffs will come, it's so like there's no way you can predict that. So that's the biggest problem which pharma could grapple with in the near term. So because given the fact that the generics are largely imported and domestic supplies are very, very limited in the US, and unlike any other product where, let's say, there's a car plant and you need to shift car manufacturing uh, more in the US or vis-a-vis other countries, it's easy to do. But for pharma, the approval processes, everything, that itself takes 3-4 years. So I think it's not so easy. The price impact will be felt by US consumers directly, but we don't know what the thinking process is. And I think that's the only reason pharma is underperforming. Otherwise, in the recent past, these companies, the large pharma companies, the results have been good. The valuations are not very demanding.
All right, so that's the take coming on the pharma space. Kunal, let me get your closing trade ideas for our viewers.
So that'll be one Kotak Bank. That's a chart which is start to look attractive, especially with the fact that the stock is confirming a breakout yet again in line with how the banking stocks have behaved. So I think even at current levels of 2100 plus looks attractive for a potential 3 to 5% swing upside.
Right. Akshay, you have any closing trade ideas for our viewers today?
Yeah. So I have two trades. First of all, good afternoon. Well, it is State Bank of India, which is noting a breakout of an inverse head and shoulder bullish pattern. That's a positional breakout and puts the chart on a very strong and firm footing, even as we head into the May month. So right now we are targeting momentum. 815 and 832 would be the two targets you can look forward to. 782 would be the stop loss. The second trade is Geo Financial, and I believe that this stock might be heading for 267 or 274 in the short term scenario in the April month itself. 232 will be the stop loss on this trade.
Okay, some interesting idea there, and Geofinance, of course, is due to report its numbers as well. But look at Bharti. The fact that the stock has now hit all-time high or a record high, their market cap has crossed 11 trillion rupees as well for the first time, in its history. Bharti has really been that one leadership stock. It hasn't corrected too much in the market fall. In fact, I don't think it's corrected at all. It did fall to maybe about 1600 thereabouts, but it's on its way to really that 1900 odd level. Sandeep, what are your thoughts on Bharti and the kind of resilience and leadership the stock has shown?
So I've talked of Bharti several times in the past. So it's one of, because of its sheer performance, it's become the top holding in our large cap strategies. And the main story remains the same: strong cash flows, increased pricing power, which gives them the ability, and lower capex intensity, which gives them the ability to pay back debt fast. And as that happens, the equity valuations go up. So there is no reason to believe that anything is going to change in that. It's just that valuations at some stage would become prohibitive. So then the stock could go through a phase of consolidation.
Right, so that's the take coming in on Airtel, given the fact that one has hit a fresh record high levels. Also, you have a lot of brokerages giving thumbs up to Bharti Airtel, and yes, the theme of being actually domestic oriented also is playing well for that particular counter. But on that note, thank you so much, Sandeep, for joining us on the show, and we'll slip into a break on this edition of Closing Trades. When we come back, we'll chart the course of the market for the next half hour of trading session. Remember, it's truncated week, so it is the last trading day of the week.
Back with Closing Trades right here on ET Now, and look what's happening in the market right now. Completely shrugged off that very quiet start that we were pegged to have today. The fact that it's a long weekend, most global markets as well are going to be shut on account of the Good Friday break. But there we have it, 400 points up in the green for the Nifty, just a whisker away literally from that all-time high on the Nifty Bank, and leadership names like ICICI Bank, Bharti, HDFC Bank, all clocking fresh highs for themselves. But since we're talking about banks, ICICI Bank and HDFC Bank are both due to report their numbers this weekend. So Monday is when we're going to react to that. But let me take it across to Gaurav and find out what the ET Now poll is penciling in.
Well, yes, the biggest private sector bank, which is HDFC Bank, is going to come up with their quarterly results on this weekend. And when we talk about estimates, we have already seen that provisional numbers from HDFC Bank were strong. When we talk about deposit, we saw a growth of around 14% on a year-on-year basis, while in terms of advances, the growth was around 5% on a year-on-year basis. But if we compare sequentially, the growth was strong at 4%. And after that, when we talk about brokerages now, they are also being a little optimistic about the bank, because when it comes to numbers and profitability, they're expecting 7% growth in net interest income. On the other hand, when we talk about PPOP, which which is pre-provisional operating profit, we may see an impact of poor other income, and that is the reason why PPOP may see a decline of around 12% on a year-on-year basis. But on the other hand, when we talk about profitability, we may see an increase of around 4%, and this will be supported by the lower credit cost. Now, Street is expecting credit cost to remain below 0.5%, and they do not see any kind of concern in terms of asset quality for HDFC Bank. But what remains a key thing to watch out for is, first is that we have already seen a rate cut cycle has begun, and that is the reason any kind of impact on net interest margins, at least for Q4, Street is not expecting any impact on net interest margin. They are expecting a moderation somewhere in the range of 3 basis points, but not a bigger rate impact is what they're expecting. But from here on, how the commentary is going to be, because let's also not forget that in FY26, management had said that HDFC Bank will grow somewhere in line with the industry. If we look at industry growth rate, it is at around 11%. So any kind of commentary on that front is going to be a key thing to watch out for. Any kind of commentary on how the deposit rate and interest rates are going to impact the overall net interest margin is something to watch out for. But all in all, good set of number is what we are expecting from HDFC Bank for Q4 of FY25.
Right, it's HDFC Bank, and not just HDFC Bank that you're tracking, Gaurav. Even ICICI Bank will be reporting their numbers over the weekend. Tell us what we are expecting for that as well.
Well, yes, over the weekend, we will also see ICICI Bank coming up with their Q4 numbers, although we do not have any provisional updates from the bank. But when it comes to the brokerage's estimates, they are expecting a strong set of numbers yet again from ICICI Bank. Let's not forget that ICICI Bank has been an outperformer when it comes to private sector bank peers, and definitely now brokerages are expecting bank to continue to do so, because when it comes to advances, they're expecting 15% growth on a year-on-year basis. Now, let's not forget that the system level growth for advances is at around 11%. So definitely there will be an outperformance. And on the other hand, when we talk about deposit, there also brokerages are expecting somewhere in the range of 12% of growth for the bank, because also here when we talk about the system growth, it is somewhere in the range of 10 to 11%. When it comes to profitability, now there also we may see this optimism carried away, because when it comes to net interest income, they're expecting around 9% growth on a year-on-year basis. On the other hand, when we talk about PPOP, which is pre-provisional operating profit, we may see a growth of around 14%, because this quarter brokerages are expecting OPEX to get down a little. Other than that, when we talk about profitability, there also we may see a healthy growth of around 11%, and there are no concerns in terms of asset quality. In fact, when it comes to credit costs, they're expecting credit costs to go down a little bit for the bank in somewhere in the range of 5 to 10 basis points. When it comes to net interest margin, now brokerages are expecting net interest margins to remain stable. In fact, some of the brokerages also believe that net interest margins can expand, because in this quarter they're expecting unsecured loan book growth to be higher than the normal loan book growth. Lastly, when we talk about some of the other factors, we have already seen ICICI Bank being an outperformer in terms of ROEs and ROAs, and it is likely to remain the same in Q4 as well. But any kind of commentary on the growth trajectory is going to be a key thing to watch out for. Any commentary on net interest margins, how the recent rate cuts are going to impact, and how bank is going to act on the recent rate cuts is something to be watched out for. But all in all, a very good set of numbers is what we're expecting from ICICI Bank in Q4 of FY25.
Okay, ICICI Bank, HDFC Bank, and those stocks are going extremely strong into their numbers. In fact, HDFC Bank has managed to hit an all-time high for itself. Anshul Sehgal too joins in on the show right now. Anshul, hi, afternoon. Are you surprised by this move in the market, the kind of resilience that one has seen, and the fact that we've pretty much covered all of our losses from those April 2nd tariff announcements?
Afternoon, Aisha. Actually, when you saw the volatility in the markets, and then you compared it to the commentary that companies were giving, whether in private meetings or in meetings that they were doing for results calls, it was quite clear that there is a huge dichotomy in how the companies are viewing their future and how the markets are reacting to prices, in terms of prices, that is. Of course, some of it was that the markets had over the last 2 years rallied a lot, and they needed to consolidate a little bit, which happened. But usually when this plays out, you see a sort of shooting of downward trend in the markets, which we saw in the period November to say February of this November last year to February of this year. We believe that the strength on the ground of businesses is so robust that this was, if at all, a correction. It was a blip in a long-term trend. and that the long-term trend for these markets remain very robust. At the margin, our belief was that the tariffs also will be positive for India, and given that as well, the volatility once it passes, people will realize that this is a great time to be buying India. And some of that we've seen in the last, say, 40, 45 days play out in the markets. We believe that there is still a lot of value in the markets, value in terms of growth that is not priced in. And there is money to be made over the next 1 to 2 years if you pick the right pockets in this market.
Right, that's true. But Anshul, I wanted to get your view on the fact that now, the fact that we are seeing so much of uncertainty when you talk about the tariff, and the fact that you've seen this recovery in the markets, at least it giving some hope to a lot of them. But where do you think the hope actually lies to make money going ahead when you talk about the sectors?
Hi. Yes, you're right. There is a lot of uncertainty, but uncertainty gives you opportunity. You will not get opportunity when things are certain, because prices are really building in that certainty. If you look at the tariffs which you mentioned and uncertainty around that, let's look at one sector in particular and talk specifics. Let's look at the textile sector. Now, India caters to only, say, 12 to 15% of the total textile imports into the US in certain categories. In other categories, as low as 3 to 5%. And the major sort of importer into the US is China. Clearly, we've seen that if there is a relative impact which is much greater on China as compared to India on tariffs, then Indian exports into the US, they become more competitive. And just anecdotally, I'll tell you, label printing machines. I was speaking to someone the other day, and label printing machines. This gentleman used to get one sort of inquiry over a period of 3 to 4 months on these label printing machines in India. And in the last week, he's got 4 inquiries. That tells you something, that even the manufacturers in the country are seeing that there is going to be significant demand uptick in textiles, and they're preparing for that. We believe that textiles and many such sectors where India is a fraction of global imports into the US, India will become the sort of more competitive, and the tariffs will be in the long term beneficial for India.
Interesting, Anshul. I'm wondering if that's a listed player.
It isn't a listed player, Aisha. It is an unlisted company whom I was speaking with. But it was eye-opening, because clearly there is tailwind in demand in a segment which is a high-value item and a very specific item for one industry.
Yeah, I thought as much, and quite intriguing, the kind of inquiries that one is getting for a minuscule part of their entire chain of Make in India. So who knows what kind of opportunity it's going to throw up. But Anshul, other than that, where is it that you think there are opportunities in this market right now? Or rather, what is it that you would even avoid?
Yeah. Aisha, that's a very pertinent question, both on where we see opportunity and where we should be avoiding certain segments of the markets. Opportunity-wise, you see, what is going to happen as a result of the tariffs is that there is going to be inshoring of capacity into the US. Similar sort of trends will be seen even in Europe. If you notice, Europe has, in many instances, increased their defense budgets from 2% of GDP to as high as 5%, which means the requirement of manufacturing within Europe will go up. Now, if you take both these things together, first capacity, then manufacturing of even defense equipment and others, then demand for metals is likely to go up materially. And so companies that benefit both on account of volumes as also on account of prices, those companies which are trading at actually quite low valuations today because of the trend not being so positive in the last 2 years, those may be beneficiaries going forward. Now, you can play this through manufacturers of metals, or you can play this through distributors of metals. And there are many other opportunities in this space as well. But metals as a category, we think will be quite attractive. On the other hand, what the tariff situation has done is that it has created some sort of an uncertainty on capex in certain segments. Also spends on tech in certain segments. If you notice, the results of tech companies have been quite tepid. Their commentary has also been tepid. While valuations have, they've come off a little bit, but they're still very expensive. We believe that that is a segment we would take some time in getting into, and we would avoid that. Pharma, CDMO, that is another segment which looks very interesting in the context of how small India is, 3 to 4% of global supplies, while China is far head and shoulders ahead of India, as high as maybe 50, 60%. That could be a transfer to India over a period of time. These are some segments where we see opportunity.
All right, so those are some of the sectors or the spots that actually Anshul is finding pretty attractive right now and sees opportunities going ahead. Akshay, let me come to you because it looks like this week auto counters will be able to snap that 3-week losing streak, and this on back of the news flow. So that's supportive globally. Also back home, you can see that trickle-down effect is the fact that Trump is mulling some tariff exemptions. But on the charts, how is the auto space looking to you? Because over the last 3 weeks, it's fallen in excess of about 5%.
Yeah, so auto sector has been at the receiving end, but if you look at the price structure in the last few trading sessions, there have been some recovery or possible short-term bottoming out scenarios in majority of the stocks. So the stocks which I like technically in this sector first would be Ashok Leyland, which has been pretty resilient in the last few trading sessions. 200 is a strong base which this stock has set up, and now it is time that the momentum gets back strongly in this stock. So right now, 230, 235 can be the upside you can work with in Ashok Leyland. 200 is the support below which you can keep your stop losses. And Bajaj Auto is more of a bottom fishing candidate where a possible double bottom is in the making. 7,500 support is possibly being sealed, and the stock is setting up for targets of 8,500 plus. So right now, these are the two stocks which look promising on technical price chart perspective. So Bajaj Auto and Ashok Leyland will be my top bets in the auto space.
Okay, Bajaj Auto, Ashok Leyland, but it's a long weekend, while of course most global markets are also going to have a trading holiday, much unlike the previous two trading holidays that we got on account of course, Good Friday. But there'll be a lot of news flow as well. And Snehi is here to tell us about all the cues that we're going to wake up to on Monday morning. Snehi?
Well, absolutely. We're heading into a long weekend, and markets back home as well as globally are also going to be reacting to some pent-up news over the course of weekend, because while our markets are closed tomorrow, major global markets are also closed on Monday on account of Easter. So lots of news flow. But first, let's understand what we can expect to see on Monday morning. We're going to have earnings reactions coming in from a lot of Nifty 50 as well as broader market companies as well. Infosys first up is going to be important to watch out for. Poor set of numbers are expected from Infosys. Constant currency revenue expected to decline by 1% sequentially. Margins are also expected to drop by 80 bips. So Infosys earnings reaction is going to be important to watch out for on Monday. Other than that, over the course of the weekend, we also have HDFC Bank numbers coming out. Strong operational updates have already been given by the company. Good set of numbers is expected. A mild moderation in NIMs is something that we could expect to see. And remember that the stock has hit an all-time high in today's trade. So HDFC Bank important to watch out for. Similarly, you also have ICICI Bank numbers that will be coming out. They're likely to maintain their leadership position in return ratios and loan book growth among large private banks with stable NIMs, and we could also see slightly upward move in their NIMs. So looking very healthy for ICICI Bank, and the street is expecting some good numbers this time around. Remember, ICICI Bank has also hit its life high in today's trade. Yes Bank, another earnings to watch out for. Other than this, also watch out for Nifty Bank, very close to hitting its all-time high as well. So Nifty Bank will be important. Other than all of this, any commentary from US, China, from Trump, the Trump admin as well as what Chinese officials have to say will be key to watch out for. You have China's loan prime rates coming out over the weekend, so that is going to be important. And well, yes, lastly, also remember that some markets will be closed on Monday as well on account of Easter. Lots of cues to watch out for on Monday, and we can expect a day full of action on Monday.
Oh yes, it's going to be a busy week up ahead, so enjoy the long weekend is all that one can say, and especially with this kind of a handoff from the market. But Kunal, let's get in some BTST trades from you.
So I'll go with two buy calls. The first one is on ICICI Bank, continue to have the buy stance which I gave in the morning as well. Would look out for now a revised target of 1440. Traders could hold on to the long positions with a trailing stop loss of 1375. The second would be on Geo Finance. That's a chart which is looking extremely attractive. An inverted head and shoulder breakout for Geo Finance. So would look out for targets of 260, stop loss at 240.
Okay, that's the take coming in on what you're seeing from some of these, interesting stock ideas coming in over there. But in the meantime, Anshul, just wanted your suggestion or, take really on what we've heard from some of the IT bellwethers so far, both TCS as well as Wipro, and then of course there's Infy as well due today in just a few hours from now. The reportage has been, extremely weak. The outlook is bleak. But do you think they make for good contra plays, considering the correction also has been very steep and very elongated in the entire IT pack?
Yeah, while the commentary has been weak, also the numbers and guidance has been quite weak for both the companies you mentioned. But TCS in particular made a very interesting comment. They said that they believe that ordering activity has not come to a standstill. It's only been deferred. They believe that the financial sector companies in the US, they are just deferring their decision because of the tariff uncertainty, but they are going to come back with gusto whenever this uncertainty kind of comes down. Because tech spending is on the top of all CEOs' minds. Now, given that at some point tech will become interesting, but I mean, for an individual investor like myself, it becomes not so attractive to look at this space for absolute returns. When the sector is trading at 25, 30 times, despite the consolidation over so many quarters in a row, and while growth is 1 to say 4, 5%, I can find much better opportunities. I don't necessarily have to be in tech, and I can catch future trends which will make much greater absolute returns from here. So for me, it's not so much of a very attractive in a sense a sector, but for someone who's building a professional portfolio, clearly tech at some point will become interesting.
Okay, Anshul, so good having you on the show. Thanks as always for joining in, and what a momentous day it is.
12.
BSE, remember, turns out, or rather turns 150, yes, you heard me right, 150 years of the recorded history of the Bombay Stock Exchange. And in fact, let's hear out what Mr. Ramamurthy is currently saying.
Financialization of household savings have increased from 27 to 39%. Currently, around 1,100 SMEs are listed in the stock exchanges in India, with BSE contributing around 570 listing. This is a very, very, very small number compared to the total number of SMEs, which are around 6 crores in this country. SME contributes in a significant way for economic development, job creation, exports, and therefore to GDP. Equity listing of SMEs goes a big way in augmenting banking by providing the risk capital and therefore enabling banks to provide quality working capital. We have to go a long way, and we will certainly work towards that. Under the leadership of Honorable Prime Minister Shri Narendra Modi ji, we are living in a golden era of Azadi Ki Amrit Kal, where we are marching towards Viksit Bharat and Atmanirbhar Bharat. Madam, with record 8 consecutive budgets, you have relentlessly been working for the cause of Indian economy and India Inc. With the continued development of our economy through growth-oriented policy formulation and robust regulatory setup, India will become a developed nation by 2047. There'll be more than 1 billion Indians who will be in the earning age contributing for this country's growth, consumption, production, savings and investments. The role of Yuva and Nari, which our Honorable Finance Minister has close to her heart, is very important in this process. Madam, we at BSE stand committed to the market development and regulation. I shall continue to contribute by performing our role diligently and relentlessly. Under the able guidance of our regulators and policymakers, we will continue to play a pivotal role in taking India's capital markets to new heights domestically and beyond. This is a momentous occasion, and I once again thank the dignitaries on the dais and the other guests for honoring us by your presence here, and I welcome you all for the event ahead. Thank you and namaskar.
Thank you, Ramamurthy ji, for those inspiring words. And here is wishing you and Team BSE the very best as you propel BSE forward into the future. Ladies and gentlemen, now, in line with the age-old tradition at the Bombay Stock Exchange, may I request Ramamurthy ji to escort Honorable Minister Srimati Nirmala Sitharaman ji to inaugurate today's proceedings with the ringing of the gong. And ladies and gentlemen, maybe we can help them with some applause when the gong rings to commemorate this 150-year celebrations. And here we go. Thank you. We now have some special initiative launches to commemorate this historic occasion. Honorable Minister, it would be our privilege to...
Well, what a gong, and who better than the Finance Minister as well as the BSE MD and CEO to actually close in on a day like today. Just, shy of that all-time high on the Nifty Bank, unfortunately. But look at the market. I mean, when we walked into trade, it seemed like it's going to be one of those very somber days. But it's pretty much been a one-way move up that you've seen in the Nifty, a 400-point move, 23,800 here. The leadership names today have really been ICICI Bank, HDFC Bank, there's been Bharti, SBI jumped up a good 3%. Reliance held out by nearly about 3% in trade. Axis Bank looked very smart. The underperformers, of course, were largely from within the IT pack. Wipro reacted negatively to its numbers. That, in any case, was known. Infosys covered some amount of lost ground. L&T did not really pick up as much. And Tech and HCL Technologies, along with Unilever, were also the pain points. The breadth of the market as well opened very nicely in favor of the advances. Be it a delivery, be it an ABB or a Zomato, all these stocks held out very, very smartly in trade. But Kunal, lots to happen in terms of news flow over the weekend. What do you foresee on Monday?
When markets go into a state of a calm, when you are expected to have so much of news flow and that last leg of uncertainty still around with respect to the global news flow around tariff, etc., and of course the domestic news flow regarding results, etc., this tells you that the markets have this shock absorption capacity. So in case if there is any kind of a negative news flow which happens for say a couple of stocks, say post results, then the markets would probably want to take it in its own stride and then move up, move on and look out for better opportunities. So I believe that that's a stage of the market which indicates that we are into a mature phase of the uptrend. This is the fourth gap which the index has been created today after this kind of a strong up move, and that really tells you the picture that we are looking at not just a minor pickup of price action but more of a ferocious V-shaped recovery.
Okay, a ferocious V-shaped recovery is what Kunal is betting for. But Kunal, we'll let you go on that note. And Akshay, thanks for your time as well. I'm going to hand it over to Snehi to wind up how the trading day has panned out.
Well, absolutely. Let's take a look at how today's trading session has panned out. And there is only one word to sum up the trading session that we've seen today, and that's excellent. Because look at the kind of moves that we're seeing coming in on the Nifty. A 1.8% uptick coming in, and it's back-to-back gains coming in for the Nifty over the course of the week. 420 points uptick coming in on an intraday basis as well. And we're firmly above the 23,800 mark, and for now even above the 23,850 level on the Nifty. Sensex too in tandem. In fact, even outperforming the Nifty, you have Sensex today, a 2% uptick coming in on Sensex just on an intraday basis. So looking very good. It's been a 1,500 point rally yet again in for the Sensex today. And let's take a look at Nifty Bank, the clear outperformer in today's trading session, a 2.2% uptick coming in. Remember, the names like HDFC Bank, ICICI Bank that are earnings candidates over the course of the weekend have already touched their life highs in today's trading session. So looking wonderful for Nifty Bank as well. It's not only the private sector banks, it's also the PSUs that have participated in this Nifty Bank and Nifty Financial rally today. Names like SBI, Kotak, Axis, HDFC, Canara, Bank of Baroda, PNB, IndusInd, all of them have logged stellar gains in today's trading session, helping the Nifty Bank stay afloat and up and away in today's trading session. Let's take a look at what the broader markets were up to in today's trade, and surprisingly breaking the usual pattern, they've underperformed the benchmarks in today's trade. Nifty Mid-Cap, almost a 0.6% uptick coming in. Nifty Small Cap Index as well, 0.3% higher. Advance decline ratio very steeply in the favor of the advances today. Market breadth was looking good, so nothing to worry on that front as well. India Wix at one point was higher by 1%, but has now slipped into the red, a 3% cut coming in. Sub the 16 mark right now is where the India Wix is, so looking very positive on that front as well. Sectorally today, financials and bank have outperformed the entire market, followed by PSU banks. Other than these financials, you had Nifty Pharma, Auto, Energy, FMCG, Realty, IT, Metal and Media. That's the pecking order of all your gainers. Surprisingly, in the last, let's say 15-20 minutes of trade, you have IT that has inched a very smart recovery and has made its way into the green from the red. Remember, at one point of the trading day, IT was down and out by 1%, and that was on the back of weak guidance coming in from the management of Wipro. That stock was lower by 5% in today's trading session. Let's pull up Wipro and see where that's ended today. 4.3% cut coming in on Wipro, so not much recovery over there. But nonetheless, overall for the IT pack, it's doing pretty well on the back of Coforge, Persistent, TCS, Emphasis, HCL Tech, and Infosys also another earnings candidate. Numbers expected anytime now. So that's also looking good for the IT in today's trading session. Some other stocks that were in focus today, Sonata was down 7% on the back of lower than expected revenue coming in from its largest client. Aluminium stocks, the likes of Hindalco, Nalco, Vedanta were in focus because Alcoa has maintained its 2025 volume guidance. All of these stocks were slightly under pressure in today's trading session, but trading rather flat. You have Zydus and Lupin that were in focus on the back of that US court action coming in on their a bladder drug that they had, and Zydus has said that they will still continue to manufacture and market this in the US. So on the back of that, Lupin has made a little bit of recovery, but Zydus was doing pretty well in today's trading session. And other than that, you also have ABB that was up and away in today's trading session on the back of good numbers coming in from its global parent. All in all, if we have to sum up this week, Nifty has broken its 2-week losing streak and we're closing firmly in the green, a 1.8% uptick almost coming in. We'll give the rate some time to settle, but above 23,800 is where we have positively closed for the day.